Rents in Dubai, they dropped almost 12% in 1 month in certain areas, and that's the headline. And if you have seen it, I get it, it sounds alarming. But if you stop at that headline, you're going to make a very, very expensive decision, because this story is not about Dubai, it's about two completely different Dubais. And which one of you are in, it will determine everything. In the next statements, I'm going to explain where the rents are falling, where they are not, and what you should do right now. My name is Saliq Zahoor. I'm the founder of Eplog Properties. I have been working in Dubai real estate for over 14 years now. I'm an engineer by qualification and a real estate broker by passion. That combination gives me something most brokers cannot offer. I also understand the financial and trading part of the business, as well as the technical side of real estate as well, which is something that stands me out from the crowd. I'm also a partner in a construction business, and we have completed more than 50 renovation and extension projects in communities like Dubai Hills, District 1, Jumeirah Island, Arabian Ranches, and also Al Barari. So what I'm sharing with you today is not advice which is I'm reading from somewhere. This is what I have done hands-on right here in the community and in the city. Let's start with the data, because data does not panic. Data does not sell newspaper. Data just tells the truth. Property Finder's last month number, average UAE rent dropped by 5.4% comparing January, February to April 26, and Dubai specifically 6.7% down. And that is real, and I'm not dismissing it. A 5% correction is meaningful, because here is the word I want you to notice: average. Average is the most dangerous word in real estate, because Dubai is not one market. JVC is not District 1, Green is not the Palm, Business Bay Studios are not MBR City Villas. Rents are falling in Dubai, technically correct, completely misleading. Let me break that down in detail. Areas seeing genuine rent softening right now: JVC, Arjan, Dubai Silicon Oasis, Discovery Gardens, Sport City, and the Greens and Imar community. The rents dropped around 12% in single month, and this is a significant correction. Now, question is, why is that happening? This is a supply story. It came to my mind like a toy story. This is a supply story, not a demand collapse. These communities have seen massive new handovers, thousands of new units all at once, thousands in the pipeline, landlords competing with each other, and renters for the first time in years have negotiating power. These communities have seen massive new handovers, thousands of new units all at once, landlords competing with each other, and the tenants for the first time in years have the negotiating power. Think of it like 10 chairs, 15 people, everyone scrambling for a seat. Add 20 more chairs, people get picky, or else they walk away. Landlords, they will feel that, and we are literally feeling that now. If you are a tenant in one of these areas, this is your window. Renegotiate, come with data. Now, the other Dubai, Palm Jumeirah, Jumeirah Strip, District 1, MBR, Premium Villas, they are holding. Dubai Hills Premium segment, they are holding rents. Why? Genuine scarcity, community infrastructure, and high net worth tenants who don't leave because a nearby area just got cheaper. And here is the data lag principle. The rental data you're reading right now, it reflects the contract signed 2 months ago or 3 months ago maybe. The numbers being reported are already old. In premium communities, the real-time negotiated rents that are happening this week are holding faster than what the data shows, and always there will be a lag between reality and what gets published. There is one thing I would like to clarify here about these communities. I will specify District 1. District 1 has seen a slight drop in the rentals. I would not overall it, but what happened surprisingly is that before the situation, we had supply in the rental market, especially 4-bedroom segment, and All of them, they were asking in the range of 750 to 800,000. Some landlords were asking 850. But what happened is that after the conflict, they have dropped the price and all the supply was snapped. So it also shows you the desirability of these communities. So the moment the landlords, they show a slight softness in it, tenants, they will pick it up because they know the value of these communities in the long run. I give this example again. What I'll tell you here is that real estate market is not like a sports car. It's like a cargo ship. When you turn the wheel and it takes some time for the ship to change its direction. And you wonder if anything has happened in the same spot. No, it changes direction slowly. The wheel turned in Q1 26, but we won't feel the full effect for another 6 to 9 months. So I believe and I foresee that Q3 and Q4 will be the revealing quarters. My read right now, soft landing. Supply driven, not demand driven. Look, Dubai's fundamentals are intact, but the mid-market apartment segment, it will stay under pressure longer than people expect. Now let's talk about the money part. Because for investors, this is where it gets interesting. Failing rents in oversupplied areas mean yield compression. JVC rents fall 5%, purchase price has not moved yet, you have a yield gap. Now, that gap, it has to close in two ways. Either the rent recovers or the price corrects. Smart investors, they position before the correction. And here is what it can get painful for some people. If you have bought in an oversupplied community chasing a 7 or 8% gross yield, that yield is compressing. Yield move with rent and right now they are moving down. But do not confuse the JVC story. With the District 1 story, this is completely different investment. If you're looking at an entry price, don't buy yield in oversupplied communities. Buy scarcity. Please buy scarcity. And if you are still forced to buy in those oversupplied communities, cherry pick the best of the best building in that community that offers the best living experience to the homeowners and potential tenants. So I would say 3 profiles, 3 action plans. Let me be direct. Profile 1, tenant in JVC, Arjan, Silicon. Renegotiate your contract now. Don't wait for renewal. Come with market data. The leverage is currently in your hands right now. Profile 2, landlord in an oversupplied community. Listen, price to today's market, not last year's number. Every month of vacancy is costing you more than a reduced rent would do it. Next, the profile 3, investor considering entry. Run the numbers at current rental rates, not projected yield from a developer. Buy communities where scarcity is structural. Buy District 1 premium villa communities, and this is where capital protection lives. If you want to buy in apartments, I'll repeat it again, like a broken band, buy in the best building in that community so that anyone who wants to buy or rent in that community, your building and your product stands out. Thank you very much for your time. I hope this has given you value. If you have any question, any concern, please feel free to reach out to me. My WhatsApp link is in the description. And I want you to share it with your network because I'm sure it will be helpful to someone who has bought in the recent years where he has been promised substantially high rentals. Thank you very much again, and I would see you in the next video.